In this video, I'm going to give you the real truth about real estate tokenization. There's a lot of misconceptions out there when people are talking about real world asset tokenization, real estate tokenization, and today we're going to get down to the bottom of it. Before I dive in, if you're interested in all things real estate tokenization, make sure you subscribe to the channel where we're going to be delivering all sorts of real estate tokenization strategy for both issuers and investors. All right, let's get into it. First things first, let me tell you what real estate tokenization actually is. Real estate tokenization is simply taking the ownership of real estate and making it digital. That's called tokenizing it, and then we put it on the blockchain. Let me give you an example. In a normal real estate syndication, you use an LLC, and there's membership units, or sometimes they're called shares. Well, when we make those membership units or shares digital, those are called tokens, and now we've tokenized the real estate and made the ownership digital. It's that simple. The first misconception is that tokenization is crypto. Now, granted, there's cryptography involved in the process, but tokenizing real estate is not crypto as you typically think about it. Instead, these are securities. So when we make that title digital and we sell fractions of it that people invest in, we are creating a security, and these real estate security tokens need to abide by Securities and Exchange Commission guidelines and laws. So it's not crypto like you see on the crypto exchanges or meme coins or this or that. It's real world asset, and it is a real world asset that is divided into fractions that we call tokens when we make them digital, not crypto. Probably the number one misconception out there is that when you tokenize real estate, it becomes liquid, and there's all this liquidity. In fact, as an industry insider, I think we've done a terrible injustice promising everybody that there's all this liquidity available when you tokenize real estate, and today that just hasn't been the case. And the reason is because you need a robust secondary marketplace where shareholder or investor, limited partner, can trade with shareholder, right? Where you can take somebody who invested in the real estate project to be able to sell it to a future investor. So one of the biggest misconceptions that I hear a lot, and frankly really bothers me, is that tokenized real estate is just like a REIT, or even worse, it's like a timeshare. And that's not the case at all. With a REIT, you're just investing in a company, right, in their fund who owns real estate, so you gain kind of an indirect exposure. You're not a direct owner of the real estate. And do I really need to get into timeshare and how those are oversold and overvalued just so you can use them? I hope not. But typically timeshares are not good investments. I'll let you do that research on your own. So what tokenization is direct ownership into a piece of real estate or the portfolio of real estate properties. This is direct ownership for direct cash flow, direct capital gain or equity gain, as well as tax benefits. That's not something you're going to get from a REIT. And you really often have no idea what they own and don't own, to where with tokenized real estate, you can see exactly which property is owned. You can go look at it, touch it, visit it, or like I said, sometimes it's a group of properties. So tokenized real estate, definitely different, and it's direct ownership into the real estate itself, not a representation via a corporate fund, or certainly not a glorified rent component like a timeshare. Another misconception that I commonly hear is that you have to be an accredited investor to invest in tokenized real estate, and that is just not the case. In fact, it doesn't really have anything to do with the investor. It has much more to do with the real estate, or more accurately, the real estate offering itself. Now, there are exemptions to registration because this is a security. Some common ones you hear are like a Regulation D 506C. And that allows this security, which is this real estate project, to be able to sell interest to the public. And it's actually called a private placement, is what it's called. Now, a Reg D 506C is for accredited investors if that's the exemption you're using. But when you resell on a secondary marketplace, after a 12-month lockup period under something called Rule 144, you can actually sell those tokenized shares to non-accredited investors. In fact, the investors in your project can resell their investments or their tokens directly to new investors, and those can be non-accredited investors. So it's not true that you have to be an accredited investor to invest in real estate. On a regulated secondary marketplace, you can invest in these as long as the deal itself is compliant. And on a secondary marketplace like the one REIT Tokens is about to launch, all deals listed are compliant and will be available to non-accredited investors. Okay, so for my real estate syndicators out there, the ones that are issuers of these, one of the top things I hear, and especially from major players or major influencers, are I'm gonna wait until I tokenize because there's still a lot of uncertainty and regulation lacks clarity surrounding tokenization, and that is absolutely not true. Because they are securities, they have to follow current securities laws. In fact, we make these tokens compliant. We code it right into what we call the layer 1 or the token itself. We can code in this compliance. So in this video, we talked about an offering being compliant under an exemption like a Regulation D 506C. Well, we can program that into the token. We also talked about a lockup period where you have to wait 12 months before those can be sold to non-accredited investors. Well, that's also something we can program right into the token. So compliance, which is of the utmost importance for both issuers or syndicators as well as the investors, can be coded right into these tokens in this ownership itself, which is fantastic. Here's a little bonus truth about real estate tokenization. You can actually code in benefits or perks into these ownership tokens as well. For example, we're tokenizing a hospitality project, and they want to bonus the buyers, the investors of these tokens, with some free nights at the location, and that can be programmed into the ownership as well. So very cool. Right, here's another big misconception. We see this a lot in the single family world, and definitely could be a worry of a large syndicator or an operator of commercial real estate, and that's that when you tokenize real estate, everybody gets a vote, or there's a DAO involved where people are voting on, you know, sell it, refinance it, paint the walls purple, whatever it is. And that's just not true. It is true that some companies will do it that way. They will actually have a voting system, and this is normally in the single family world, where people can vote on the next property manager. Do I hire them or do I fire them? And, you know, can kind of be involved with that. It's extremely cumbersome. And you can get away with it on a single family deal. But typically on larger apartment buildings or storage facilities or some of these more advanced commercial real estate projects, you want a real pro running that. You don't want majority rules to win, because that's typically not going to be the expert making the rules for that. Now, there may be some factors that are voted on in these structures. I'm not saying none of them are. But what the rent raises are and what property management company to use, you want to pick an operator that has a great success resume. That's why you're investing with them in the first place. Because really, you're investing in real estate, not the novelty of tokenization. It's the real estate and the operator of the real estate that you're investing in. And you want that expert, that pro, to be the decision maker. So typically, investing in tokenized real estate is a passive investment. You're what's called a limited partner, and you're just investing in the ownership while somebody else does all the work, somebody else makes the tough decisions. So make sure you pick the right type of operator, the right type of general partner for that deal, but you're not going to be forced to be involved with those decisions or be at the mercy of people that lack experience and expertise voting on your real estate investment. That just typically doesn't go well. When people that are not experts at investing in real estate and operating these real estate projects have a vote, that can potentially lead to disaster. So although it may be able to work on a single family home with a single management company, it's not great for a more advanced investment like, say, an apartment building. Big misconception is that once a piece of real estate is tokenized, you can just list it on a secondary marketplace. And it goes back to that liquidity factor, that misconception that we talked about earlier. That's not actually true. A real secondary marketplace called an ATS, or an alternative trading system, is SEC regulated and must be done by a licensed broker-dealer. In fact, a digital licensed broker-dealer. And that broker-dealer is responsible for doing due diligence on all of these listings and all of these offerings. As a broker-dealer and an ATS, you are responsible to make sure what goes on your platform and what goes on your exchange is done in a manner to protect investors, to disclose information to investors, to inform them and give them access to the right type of information that they need to make a good investment decision, and validate to the best of your ability that that information is true and accurate. RE Tokens is doing to bring liquidity, I promised you guys I would address this, is launching a true SEC regulated secondary marketplace for private real estate investments. So those LLC ownership units or shares, or when we make them digital, they're called tokens. You will actually be able to trade these from investor to investor on our ATS secondary marketplace. And this fulfills the promise that real estate tokenization brings. That all of the real estate tokenization platforms in the industry are touting liquidity, liquidity, liquidity. Well, here at RE Tokens, we're making that a reality with our secondary marketplace that we'll be launching early summer 2025. So I'm really excited for real estate syndicators and sponsors to be able to unlock that trapped equity that they have in their real estate and their real estate projects and really scale their brand globally. I'm just as excited for real estate investors to gain access to these high quality real estate investments that they have not been able to get into in the past, so that they can build wealth through real estate and achieve freedom through cash flow.